Hey guys, I hope you're well and welcome to today's live coverage of the U.S. non-farm payrolls. My name is Alejandro Zambrano, Chief Market Analyst with Trade Captain and Amana Capital. And I hope you're doing well. Happy Friday to you guys. And as usually is, the first Friday of the week, it's fireworks for the currency markets. Obviously, the euro dollar right now is muted, and I'm going to explain to you why it is muted. And I'm going to try to guide you as well, as volatility is just going to spike massively, or should really spike massively in the next, 10 minutes? Yeah, 10 minutes. So, before we start, though, as always, I need to stress that trading financial markets is unfortunately risky, and there's a genuine risk to lose all of our invested money. And today, specifically, because this is a live trading session, I'm going to show you guys some live technical analysis. I'm going to try to interpret the non-farm payrolls data when that's out in 10 minutes. And I'm going to tell you what I think is going to happen, but it doesn't mean that you actually have to do all of this. And obviously, at the end of the day, we're all grown-ups, right? So whatever you do on your account, you're responsible for that, and vice versa, right? So let's begin. All right, so known for payrolls. I guess most of you guys know what that's all about. If you don't know, it's just a report from the U.S. that tells us how the U.S. labor market is doing. And let me show you the latest numbers so you get an idea of what the market is anticipating. I'm going to grab those from a Bloomberg platform that I'm working with. And here we go. So this is the US data. It's going to be out in about 10 minutes time. So this is the big number that everybody watched. So according to the latest survey here in Bloomberg, the anticipated outcome is 180,000 new jobs versus 148,000 new jobs at the last reading. Then we're also going to watch the unemployment rate, which is anticipated to be at 4.1 from 4.1 anticipated, and then sometimes we need to watch the labor force participation rate. Now the big number, so what is really relevant is wage growth. So for the month of January, the market anticipate that wage growth in the US increased by 2.6% from last year's figures, and is this which is going to drive inflation going forward. So if this number, which is anticipated to be 2.6, maybe if it's 2.7 or 2.8, then that would probably tell the Federal Reserve that it's time to be aggressive with interest rates. The market already anticipates rate hikes this year, and higher reading than 2.6, like 2.7, 2.8, could cause people to anticipate even more rate hikes. The other thing is that if this number is lower than anticipated, then the opposite is going to happen. So let's actually take a look at that while we at it. I'm going to see if I can see what the market anticipates in form of rate hikes. So just give me a second. I'm going to load that exactly. It's not 100% necessary to know these things, but it's always good to have a rough idea. So look here. In the next year, for the United States, the market anticipates 77 basis points of rate hikes. Now, every rate hike tends to be 25 basis points. That means that 77 over 25, and the market is anticipating 3 rate hikes, which is pretty much what the Fed themselves are anticipating. Now, for that to happen, they actually want to see inflation tick up. So core PCE inflation is at 1.5%. That number was out earlier this week. And they think that by the end of the year, core inflation should be at 1.9%. And that's really the only variable in the Fed projections published in December, I think it was, that actually tells us that actually changes along with the interest rates. So core inflation is key for the Fed this year. And what is core, or what's important for core inflation? Well, it is wages. So it's the wage number that we need to watch. So now we know a little bit of what this is all about. Again, if the labor market report is stronger than anticipated, we might see the dollar gain as people anticipate more than 3 rate hikes next year. The other way around is as well. If numbers are lower than expected, then 3% rate hikes will look quite unlikely for this year. So very straightforward. Good data, people buy dollars. Bad data, people sell dollars. All right? Very straightforward. Now, let's take a look here at certain setups then. So what if the numbers are bad? Well, if numbers are bad, then I think the euro is probably going to break this level up here, which is the high of this week. And that could potentially lift the market to 126, which is a high from 2014. Now, what's the issue with this trade? The issue with this trade is that the last major low is down here at 23.90.29. So that means that if we buy here, maybe we can get away with putting a stop loss just below today's low. That will be a 50 pip risk versus a potential return of 68, which is good. But most likely, at least the stop would need to be down here. That means that we will be risking 195 pip versus a potential gain of about 65 pip. Now that's a bad risk reward ratio because we look to risk more than we could actually make. So buying this market on bad data from the US, I don't think it's going to be a good idea. At the same time, if the numbers from the US are really strong, well, if we break to the downside here, I mean, if we just go down here, well, technically, because this is just a normal correction, people are probably not going to sell euros. I mean, it's going to go down, but when we trade down here, I think people are going to buy, unless, of course, the core inflation or unless wage numbers are extremely strong. So here we don't actually have a good setup for dollar weakness. The key market I like for this, for dollar weakness, is the CAD. So let me actually load something different. I'm going to load a different set of charts here. It's taking a few seconds here just because we're streaming at the same time, so everything just goes very slowly when that's... Okay, so this is the CAD. I like the CAD because it's not extremely, it's pretty much trading where it started the week. And here, on a break to this double bottom, which would only make sense on weak numbers from the US. If that happens, take out one set of lows, the market's going to target the next set of lows, which is a low here from September 20th, and then could potentially target 120, 170, 17. So I prefer this better just because it hasn't actually moved too much here. So here we're looking at a potential stop just above here. At least that's what I think traders are going to do. Doesn't mean that you should do it, but we're looking at a potential risk here on a break of 88 pip and potentially a return of 46 and then 120. So I like this on bad numbers from the US. On good numbers, well, let's look around. We need to look for that. So here's the pound dollar. Even if the numbers are very good from the US, this market is just going to come back down to the low and people are going to try to buy at the low. Let's take a look at the dollar yen. Dollar yen actually is in a bit of a bullish uptrend. So this could be something. So here they could potentially squeeze to the upside. And if we look here from a 1 hour perspective, it's not necessarily ideal, but I think if the numbers are good, we'll be at the 110.16, maybe 110.14. But we need to keep on looking here. This is actually a good one. This is a good one because it's potentially a reversal here in the Aussie dollar. It's not an optimal one, but it's a better than much of the other stuff we watched. Why? Because you got the Aussie dollar all the way to the upside here since this month. Oh, this is actually since December. And then we breached the downtrend here. And maybe we'll see a continuation of this downtrend. So this could be something. And let me see here. The numbers are going to be out in a minute or two. A second or two, actually. Okay, so let's just wait now. But a break here could be interesting. So let me see. The numbers are going to be out any minute now. They are out now. 2.9. So better numbers than expected. It's 2 point better. Let me just check something here. So numbers are better than expected from the US. I think this could be interesting. Where the Australian dollar could potentially move to the downside. Okay. 76.54 is, I think, a level that we should watch, and I think we could potentially break that level now. Why? Because those inflation numbers are really good. Really good. So not inflation, but wage numbers. Really good. 2.9%. That's really good. So I think if we break this 75.54 level, this market can move to the downside. Risk reward wise though, how good is this? Well, we're looking at a risk of 100 pip versus a potential decline of 109. So it's okay. It's not optimal, but it's okay. And it's definitely something to watch. So I think now we did have the first test, so that will be 79.50. I think if we slide below that level, we're gonna probably head lower on that. 75, 79.50. So I'm watching 79.50. Okay. Now we just need to wait. So let me explain to you why I think this makes sense. If you have any questions as well, it's time to ask. So, unemployment rate, as expected. Non-farm payrolls, just a little bit better. But look at this, nice move. Wage growth, 2.9. And the other one revised to 2.7. So I think we're gonna break here. And if we break the 50 level, then I'm gonna be triggered. So I just got triggered on a short position. And as I said in the past, as long as you trade below 80.49, I'm gonna be bearish. And I think this could squeeze price at least to 79. Obviously, if it goes up to 80.49, I'll lose my 100 pips. And I'll try to find some other setup. In regards to the dollar CAD, I'm guessing, yes, you see the dollar CAD is pushing to the upside now. And it's the same thing here with the euro moving down a little bit. So, because people that bought maybe earlier this week, they're probably saying that, you know what, the market, moved up a bit. I had a bit of a profit. The numbers are quite good. So let's unload some. And that's why this is going down. But the euro doesn't stand necessarily to gain substantially or to soften too much. I think it can go down to maybe 124 on this. But if we're trading above 124 or trading around 124 and didn't breach 123.30 by Monday, then I think what's going to happen here is that come Monday, and people might say, all right, let's look to get involved. Let's look to buy again. And we might move to the upside. It's the same thing with the pound versus the USD. Profit taking kicking off and probably a little bit lower. But if we're trading above this level on Monday, I think traders are going to try to lift this again. Dollar yen, of course, just rallying to the upside, pushing to the upside here. But again, this is what I think is the most interesting. Not sure if it's going to work out, but ideally, what happens now is that in the next, say, 25-30 minutes, this pushes more, so 79.20 or something like that. So it just doesn't stop here because that wouldn't be too good. And then probably down, and then probably up, and then maybe down to 78.46. We can also look at it around. There's other stuff probably that could gain on the back of these numbers. I know, for example, let's take a look at, unfortunately, we need to go as far as, dollar, Norwegian kroner, things like that. Because the dollar hasn't had a good start of the year. So this is dollar Norwegian kroner. It's so bearish here that, even if the numbers were better in the US, people don't want to buy, at least not right now. And dollar Russian ruble is just above the low here from last year. There's an election coming up, presidential election. Don't worry, people, even though it's quite likely that there's not going to be a major political change. But here, potentially looking to bottom out. Dollar Mexican peso. Now, man, I think this is it for now. Aussie dollar really is just looks good. Okay, if you are in the GoToMeeting link here, then we should be able to answer any questions. So let's see what you say. If you have anything to say. So we have one person here. Wanda says that they don't have any sound. Everybody else, do you have sound? I hope you have sound. So I haven't been speaking to myself now for the last 20 minutes. And if you're new to this is actually a live trading event session really that we host here at tradecaptain.com. We have some more coming up next week. Canadian non-farm payrolls tends to be very straightforward like this, but less confusing. It's literally good numbers from Canada, people buy the CAD. Bad numbers from Canada, people sell the CAD. And then on the January 21st, we have coverage of the UK unemployment rate. That could be a little bit more trickier to trade. Today we're live actually on Periscope, on Trade Captain's Periscope, but this is the first time in about 20 of these sessions. So if you want to join, make sure you go here on education, webinars, and that way you can sign up. Okay, good. Hi, Guy. Thank you so much for joining. I hope you're doing well. Long time no see. Federico here is here as well. And Marwan as well. Good to see so many of you guys here. So the Aussie dollar right now at it's pretty much where it was a few minutes ago. It spiked lower. Hopefully it continues just to push below here. We are seeing some resistance by traders here. They're not really wanting price to move substantially lower. Something I like to watch on the 30-minute is a bit how it closes. So for example, if this candle will, this is the candle, right? So one way to look at it is that, this is the candle and we went all the way down here, and this is not going to close until 22 minutes from now. But obviously if this goes all the way up and it tries to close at 61.8% correction or something like that, then that would be bad in the sense that it would be a rejection of this downtrend here, or this potential breakout here. Ideally, in fact, we want to see close somewhere where we are right now, if not lower. Ideally, lower 17,950. And the reason why I picked this currency specifically is because the market is in a downtrend, as you can see, at least in the short term. I was bullish up until we took out this low here. So when we took out this low here, the market stopped creating these higher and higher lows, and because of that, it made sense to me that the market would look to move down lower, and that's why this is interesting. On the other hand, with the euro, you're dealing with an uptrend, right? And because you're dealing with this uptrend, the market is not ready to sell. In fact, we go down and people say, well, let's buy some. So that is why these pairs like the euro and the pound are not really that interesting to trade, even if these numbers are good. Okay, I don't have any more questions, so I think we're gonna wrap things up here. I want to thank you so much for being able to join me here. I want to thank everybody as well that is on Periscope. Join me for another session like this next week, this time, as we cover the Canadian non-farm payrolls. Have a good weekend, and talk with you guys soon. Thanks.